Good morning, everyone, and welcome to the European crossover webinar. And sorry for the delay; my alarm did not even go off. But anyway, that being said, we did go on and earlier go on and get UK as well as French and Spanish data. Now we got out of the UK. We did go on and get the UK GDP, which came in actually stronger at shown here at 4.1% versus 3.4%. As well as industrial output month over month actually came in a negative 0.110%, and manufacturing output. Now, out of France, we did go get CPI, which came in at 0.2, right in line. And then, of course, Spanish CPI, which came in at 0.2, also right in line. And let's go on and move into the indexes. Now we did go in and see that pullback, and actually this started to happen in Asia. I was up late actually looking in Asia. Looked like the market wanted to go in and break down. We did finally get this breakdown right before, you can see here, and I'm talking about the Nasdaq. The key is this let me go back to this here, is on the 2-hour chart. And you can see here that we got the close. And one of the things I mentioned in the chat room yesterday afternoon is that I thought it had been 5 days. It hadn't been quite 5 days, but I said that the amount of consecutive 2-hour closes below 12,900. Well, we got one, and then it looks like we snapped right back to 12,900, and here we are at 12,878. Now we actually had a pretty good little dip here before trying to recover back. But you can see here where the market does look open to paring back. We'll see, but right now we are below that 12,900. But it looks like we may be on the beginning of starting to, as I mentioned to one of the someone yesterday in the chat room, they said, "Do you think we're going to reverse from here?" And I said, "Well, I don't know about reversing, but I think that we'll pare back. We'll see that this next week." And I just mentioned different things as far as Biden had already had provided the plan, and as well as we'd seen the Fed going and speak, and it appeared that they were apparently very dovish. But at the time, the market already started to come off, and it wasn't even rallying on this so-called dovishness. And one of the things I pointed out was these twin deficits, and what's his name, Powell, alluded to that and said that's not sustainable. The debt's not sustainable. And I saw when he mentioned that, we saw the market kind of push a little bit lower. And like I said, then with the stimulus plan, you try to see a market come up a little bit, but it was a little bit feeble. And then finally, we saw this market work a little bit lower. And I think that we can start to do that because what more upside is there? And once again, it's not like expect the market to turn around and fall apart. But if, once again, I mentioned this the other day, when you put things in context, we're still way up here in the stars. You see that? So that's what I think we'll see, a bit of a pare back. Take a look to see where Bitcoin's at. Bitcoin's at 38,600. So we got above that level we were talking about yesterday. So here we were yesterday, and here we are. We slid right back below. We're back up here, 38,600 here on Bitcoin. We'll go on and pull up the news. So Australia and New Zealand dollars stood firmly on Friday as the promise of massive U.S. fiscal stimulus brightened the outlook on global growth and resource prices. Joe Biden unveiled a $1.9 billion package to jumpstart the economy that was boon to growth-sensitive currencies as the Aussie, which held 77.74, having stretched as far as 78.05, which sets our bias chart resistance. Kiwi at 72.18 struggled to clear resistance to 72.40. Support comes in at the week at 71.48. The U.S. currency was undermined by the dovish outlook for Fed Chair Jerome Powell, who showed no inclination to taper asset purchases anytime soon. The Aussie 10-year yields edged up to 1.09%, but U.S. yields even more so The spread between the two moved to 3 basis points. A surprisingly brisk recovery is a domestic economy. It means the Aussie government needs to borrow at a lot less than first projected. The positive momentum that the property market is anticipated to continue, said Marie Kilroy. Price growth has returned to all major markets with the home buyer optimism on the up. This all bodes well for loan demand and a boom, and both for established and new dwellings in the new year. And the dollar rises as the currency markets turn risk averse. Aussie and Kiwi fall. The dollar rose and riskier currencies fell on Friday as Joe Biden rolled out the 1.9 stimulus, although the dollar's rebound slowed somewhat overnight after Jerome Powell said now is not the time to be talking about changing the Fed's asset purchases. 8:30 GMT, the dollar index was at 945 versus a basket of currencies, up 0.2 on the day. Against a strong dollar, the euro was down to 21.21. Joe Biden laid out the $1.9 trillion package. The reality is that while the Democrats have increased the power, having won the runoff elections in Georgia last week, the power still has its limits, and the details of the fiscal package suggest the overall size will be whittled down before it gets support required to get through Senate, which that part is true. I had heard that also. Outgoing Trump administration ramped up tensions with China, imposing sanctions on Chinese officials and companies, including an investment ban on those additional companies, moves China said it firmly opposes. So with that, we're seeing here that the Nasdaq, we did get this rally back to 12,900. You can see right here, and we've since paired off a bit here. Once again, I was looking for this market to, once again, going forward, to going to move lower. And we're going to get into the analysis. And we're going to start now with the euro. So the euro traded in a tight range on Thursday. Support on Friday will be 20.73 with resistance at 22.06. So we're looking for potentially this might move lower if we do see the Nasdaq and S&P start to pair back further. We'll see what happens. So 20.73. $22.06. And onto the cable. This is something else. I couldn't believe this. I was looking at this in Asia and like, holy smokes, it's even gone even further. But it has, but nonetheless, our resistance is still remaining the same, which is that 37.09 area here. We had 37 yesterday, but that weekly level wick is actually 37.09. We had that previously before as a bias chart resistance. So cable added to its gains on Thursday, albeit in a tight range. Resistance on Friday remains 37.09, which is a weekly level. Support will be 36.26. And on to the Aussie dollar. The Aussie closed higher on Thursday. Resistance will be 78.05 with support at 76.92. So I'm expecting this to slide even further. So 78.05, we give it a little bit more room to the upside. And 76.92 to the downside. To the Kiwi. Kiwi closed higher on Thursday, opening a push for a move higher. You can see right here. This has been something else. Look at this, down, up, just like the market's just thrashing about. But I still think we'll be able to work a little bit lower. Opening a push higher. Resistance on Friday will be 72.50, which it didn't even come quite close there. And support will be 71.11, followed by 70.78. And we'll get that resolved. Hold on one moment. Next up is the dollar CAD. And this one I actually mentioned quite a few times in the chat room yesterday as we dipped lower. The bias chart was 26.54, but I said, hey, look, we have a huge resistance level, support level at 26.32. The market got as low as I saw 26.26. I've been 26.25. And then not too far afterwards, we got back above 26.32, and at the time we were at 26.39, and then I saw in Asia where we were at 26.52, and of course right now we're 26.89. So the dollar CAD broke to new lows. Huge support level of 26.32 held overall and will be support on Friday. Resistance will be 27.08. And on to the dollar peso. So the dollar peso broke lower through weekly, although the weekly level of 1967, you can see that, held. Support on Friday will be 1967 with resistance at 1988. On to the dollar yen. So the dollar yen traded in a near 75 pip range on Thursday. Resistance on Friday will be 404 with support at 352. You can see here, wow, that was almost 75 pips, but we're trading super quiet today. So once again, on the downside, 352. On the upside, 404. So just a change of 2 pips. And onto the cash dollar index. And this is really in a tight range yesterday. You can see here we had just like, I guess you might call it a medium-legged doji, but I don't know, the range was so tight. But we didn't go anywhere, and we're not even going much where even right now, you can see it's super tight range, but we are a little bit on the upside. On the cash dollar index, the dollar index posted a doji on Thursday. Resistance on Friday will be 90.89 with support at 89.89. So could be a big range. Although I think we're more bound to the upside. I wasn't sure if it was going to fall apart, but you couldn't trust this dollar. But on the upside, 90.89. Onto the cross rates. This market, after making this jump up here earlier in the week, we've fallen back and we're just, once again, just like some of these other pairs. Look at this, like the Kiwi. Look at this. Down, up, down, up, down. You see what I'm saying? So it looks like we do want to open a door for a little bit lower, a break, which technically will drive us down here. I don't think we're going to see this today, but I will open the door for it to move down there. 74.05. And for the upside is going to be right there on the close of this bar, which will be 74.95. And onto the euro pound, and this one has really been all over the place, although more of a downside buy slightly. But look, I mentioned the last week it looked like an electrocardiogram, but now we've really pushed to the lows. But this level is really key. It did hold yesterday. It wasn't our bias chart support. Well, actually, we were pretty close at 88.85. But that level has held up very well. I mean, it got below it, but it's defended it, which is going to be 88.75. And resistance, you can see that's coming across. Look at the high on this wick right here, and confluences with this wick. And then I'm looking here. So when you look there, resistance is going to be 89.19. Onto the euro odd. This thing, after breaking so low, really looks like bad news. But we did have 56.62. This is amazing. It even broke below the 56. So that's actually going to be our support. We'll just keep it simple, which is going to be 56 even. And resistance on the upside is going to be right there as a 57.10. If we get a little bit of short covering. Onto the Euro Kiwi. Looks like pretty much the same thing here. Major level here at 68.03. It looks like it wants to fend that off. So we'll go with yesterday's low, which was 68.10, which was close enough. With the high being right here, you can see that the close there. And that would be 69.16. Onto the guppy. I'm going to say onto the Aussie yen. This is hung up here very well. But we're starting to say the same thing: up, down, up, down, up, down. Open the door for potentially a break lower. We'll go with that for the lows of 79.98 for support. Looking like the market's tired here, and we'll go to a 2-hour chart. This would be resistance. You see right coming across here, which would be 80.48. Onto the guppy. And we have really tried to stretch this, but you can see where the resistance is going to be right there on the closing bar yesterday, which is its best close, which would be 42.04. And support is going to be right there, 41.15. And now to the sterling odd. Looks like they're finally trying to put in a little semblance of a bottom. If you look at this wick right here, did put in that low, but that wick, that should serve as support, which is going to be 75.25, which is what we had, although it did dip down to 75. And then resistance, if immediate resistance is here, but you got to look for this market to push higher. You can see some wicks coming in and the open right here, which is going to be 77.07. Now let's take a look at where we stand here across the board, across Fangman. Now you take a look at Apple. We talked about this yesterday, and here's that key 129. You can see we closed below that 129 yesterday, just slightly below it. We can look where we are in pre-market hours. We're just basically saying where we're at. Microsoft, you can see here we've lost that 216. We jumped above it yesterday, but we lost it. And we talked about that is that even though the Nasdaq has been rallying, if you look at the Fangman overall, these levels are not anywhere you would expect where we've seen the NQ at. You know, the NQ blowing out here. But we did say that it's mirroring really the pandemic stocks. We talked about those yesterday. Peloton, PayPal, eBay, to a certain extent Zoom, but Zoom has been on the downside for its own reasons because hopefully things start to come out okay, although now it looks like we're starting to slide back. You take a look at Amazon. We've mentioned here also, we mentioned this yesterday. Look at the highs all the way up here at 3,500, and here we are. And like, how the heck could the NQ be up that high? We did see the NQ going and pair back. What you can see here, when you look at Fangman overall, you have to scratch your head and say, well, if these are the ones that make up the most volume or the biggest weight, I should say the heaviest weight, how the heck could the NQ be up there? Google, though, although it has broken below this trend line, is still holding up here. If we break this 17, you can see right there, that 1726 area could bode, we're already below it right now, but if we break that, really opens the door, and really the key level comes in at 1700. We break there, it opens the door for us to make a move realistically down about 1630. So you'd be looking for a $70 move lower if we break 1700. You take a look at NVIDIA, same thing. You see we've made that move back above 15 above 551, but it came back, and you can see yesterday we pushed lower. Once again, you have to scratch in your head like, how the heck can NQ be all the way up here when these key stocks that make up the heaviest weight are lower? And of course, Facebook, which has its own problems previously before, but then of course with the whole suspending the account for Trump and all that, really caused these markets like that and Twitter to push lower here. Well, now going and take a look at where we stand here with Tesla. We talked about that it was kind of like spinning its wheels. Although it's still up here, let's go there. Bear with me one moment. Okay. Irina says, hey, Paulie, your support on cable is 26.26 and resistance is 37.09. Bear with me one moment. Yeah, thanks for that. I meant to put, thank you very much for that. I meant to put 36.26. So thank you very much, Irina, for pointing that out. It's support is 36.26, not 26.26. Apologize. My fingers are always getting a little flubby sometimes when I hit the keys. Um, Thank you very much for that. Let me go on and switch over now to Tesla. So we talked about this yesterday. If you look at Tesla, it's still holding up very well. We pared back a bit, but it's still holding up very well here. I would have thought we may have pared back, but heck no, we're still holding up here. I mean, it looks a little bit questionable here now. I mean, you're forming here from yesterday, formed a little bit of a gravestone doji. We'll see it's closed here at 846. And where are we at in pre-market? We're 845. So basically it hasn't even moved. You can see PayPal. After setting new highs yesterday, it paired back. These pandemic plays are something else. Bear with me a moment. Let's take a look here at Peloton. Wow, look at that. New highs yesterday, the same way that PayPal did. These crazy pandemic stocks are something else. They did go to new highs. That's what I'm saying. When you look at the FANG man, you're like scratching your head like, wait a minute, this doesn't even make any sense. How can the NQ be here? But it's really following these um, pandemic plays. But the odd thing is that FANG man is the one that carries the most weight. So it kind of makes you know, over the last couple of weeks, has had my head scratching. But you can see here, Peloton made a new high yesterday, although paired back. Take a look at eBay. We talked about eBay, how it had broken above that trend line. You can see right here. You see that? But we've fallen back in. We have fallen back in a bit. So that's where we stand on that. We can also take a look at where we stand here on gold. Now, I still have February gold, so we'd start to need to move this out to April gold, which would then become the new front month, April gold. Same thing with crude oil here. That finally paired back, but we would be rolling out to March crude. Now, I did want to go and take a look at how we stand here on the Russell. This Russell is bananas. Look at that. It made a new high yesterday. Now, it closed off a little bit here, but holy smokes, this thing is just something else. And someone made a good point yesterday about the VIX and said we were creeping up a little bit. And sure enough, look how we closed yesterday. And look at right here. So looking like we might, it's still early, but the odd thing is how quickly we'd snapped up on these days. Look at that. So we'll see whether or not we get some volatility come in. We'll take a move, a look into the S&P and also Bitcoin. As I told you yesterday, I'll keep the S&P here, primarily just on the 5-minute chart, just in case the markets get moving. And I wouldn't say an extreme level, but it would get a push. Then I made that observation a couple of days ago, or yesterday. I said from the 2 days prior, I saw the Nasdaq making a new low, but when I looked at the S&P was kind of holding up. I'm like, okay, well, the downside of the Nasdaq might be rather limited. They quite often will diverge, but they won't completely disconnect. So I do go on and keep it there as just a comparison. But looking here at the S&P, you can see we went right to that level yesterday. We were talking about, I think Arena said, hey, can you look at the S&P? I put the marker right here. I told you this will be the key. And sure enough, look, they made that run there and it's held up. This is on a 2-hour chart. So we made that run and we popped right off of that level, which I think it was at 37.80 or 85. There you go. Actually 37.68. 37.68. So you can see we broke down, we went right to that level, and we held it. We bounced off. We're struggling a little bit, but we went right to that level. Taking a look at where we stand here on the Nasdaq, as I mentioned to you. I've talked about the importance of the 12,900. And so we had not, I mentioned it was 5 days, had not been 5 days, but you can see here, since we had consecutive closes below 12,900, you can see to back here. After this, you see we break. Oh, okay, now we're going to break. Boom, they go to new lows and they fly right back above 12,900. Then we come back down below 12,900. We close right back. Then we take a couple of stabs below 12,900, but we keep staying above it. We close below 12,900. You can see right here, even this morning, we jumped right back to 12,900. Now we're back below 100. So we actually, for a little while, you have to go all the way to here. We have not had 2 consecutive closes below 12,900. We'll see how we stand right now. Also taking a look at Bitcoin. Yesterday, we were talking about the significance of 38,600. And this is where we were yesterday. I said, if we break above that, that's going to open the door for us to move higher. I didn't think we'd even get above 40,000. We sure did, but we've turned around and given up those gains, slid back, and we're right back up here at 38,600. But the market is holding up remarkably well. As I mentioned, after this big break, I would have thought people would have been in trouble, and we would have slid down to at least challenge down here to this trend line here. We'd already broken down here to 30,000, but the idea this market not only broke above it, held, and even rallied to 40,000, and we're pulling back. We'll have to see what happens here. But if this thing gets back above here, watch out. It really would take off. So that's it. We'll see how we play out. I'll get the bias chart posted in the chat room. And thanks for joining us here on the European crossover webinar.